What if I told you that your biggest financial fear is actually costing you more money than any stock market crash in history? It sounds impossible, right? But the shocking reality is that the fear of losing money is keeping millions from building wealth. And in 2026, with headlines designed to scare you, this fear feels more expensive than ever. Words like recession, volatility, and uncertainty are everywhere, making you think that the safest place for your money is on the sidelines, tucked away in cash. But what if the sidelines aren't safe at all? What if staying out of the market is the one decision that guarantees you will lose? Today, we're going to confront those fears head on. We'll dismantle them one by one with facts, not feelings. And I'll show you why 2026 isn't a year to be feared, but a year of incredible opportunity that you can't afford to miss. Let's be honest, you're feeling anxious. A recent Allianz Life survey found that nearly half of investors are too nervous to put money in the market. You hear whispers of a bubble, you see the market hit new highs, and you think, I've missed the boat, or it's bound to fall now. Maybe you feel like it's all just too complicated, with talk of AI, trade policy, and inflation making your head spin. You're not alone. These fears are completely normal. They come from a healthy desire to protect what you've worked so hard for. Every instinct tells you to wait for a better time, for the dust to settle, for a clearer sign that it's safe to jump in. But here's the problem with waiting for that perfect, risk-free moment. It doesn't exist, and the cost of waiting is far greater than you can imagine. Let's talk about the hidden danger of staying on the sidelines. The biggest financial danger in 2026 isn't a potential market downturn. It's the certainty of losing money by doing nothing. That silent wealth killer is called inflation. While inflation is easing from its recent peaks, some forecasts for 2026 see it remaining above the Federal Reserve's 2% target, with projections from RBC Economics and others suggesting it could remain stuck closer to 3%. Think about what that means. If your money is sitting in a standard savings account earning next to nothing, you are guaranteed to lose a portion of your purchasing power this year. $100,000 in cash becomes $97,000 in terms of what it can actually buy you. The next year, it loses more, and so on. It's a slow, silent erosion of your financial future. While you're waiting on the sidelines, afraid of the market's ups and downs, your money is in a guaranteed slow-motion crash of its own. Now that we've established the real risk isn't just volatility, but the guaranteed loss from inflation, let's look at the opportunity. Let's talk about why the very things causing anxiety are actually creating the foundation for a powerful new phase of growth. I know these fears are real, so pause for a second and tell me in the comments below, what is your single biggest fear about investing right now? Is it a crash? Not knowing where to start? Let's get it out in the open, because naming your fear is the first step to conquering it. And while you're down there, make sure you're subscribed so you don't miss out on content designed to build your financial confidence. Now, let's pivot from fear to facts. Despite the scary headlines, the consensus among major financial institutions is not one of doom and gloom. In fact, it's one of resilience and opportunity. First, let's tackle the biggest fear, a recession. Forecasts from leading institutions are systematically reducing those worries. Goldman Sachs projects sturdy global growth of 2.8% in 2026, with the U.S. economy outperforming at 2.5%. The IMF is even more optimistic, anticipating 3.3% global growth. Meanwhile, J.P. Morgan and RSM have lowered their probability of a U.S. recession to 35% and 30% respectively, citing a resilient economy. These aren't just numbers. They paint a picture of a global economy that is not just surviving, but thriving. They point to a foundation strong enough to support corporate earnings and, in extension, the stock market. So where is this surprising strength coming from? The answer is a word you've heard 1,000 times, but may not have connected to your own investment strategy: artificial intelligence. AI is not just a tech buzzword, it is the engine of our current and future economy. We are in the midst of a technological revolution that is sparking a massive wave of investment. Forecasts for capital expenditure by major AI players in 2026 are staggering, with some estimates from Goldman Sachs and Gartner suggesting total spending could be well over $500 billion. In fact, the Magnificent Seven tech giants alone are on pace to spend over $680 billion, largely on AI infrastructure. This isn't just money being thrown at abstract ideas. It's concrete investment in the building blocks of the future: data centers, semiconductors, and the power grid needed to support them all. This spending spree creates a powerful ripple effect, fueling earnings for the companies building this infrastructure. But the real, long-term opportunity lies in the next phase: productivity. AI is poised to make businesses more efficient, cutting costs and boosting profit margins. This isn't a far-off dream. It's beginning to happen now. As companies integrate AI into their workflows, from coding to customer service, their profitability increases. That increased profit is the fundamental driver of stock prices. The AI revolution is creating a clear division in the market between the innovators and those being left behind. And for investors, this creates incredible opportunities to invest in the companies that are building and harnessing this transformative technology. So, let's go back to those specific fears we talked about and dismantle them with this new perspective. First, the fear of a market crash. While nobody can predict the future and market corrections of 10% are a normal part of the cycle, the underlying economic data simply doesn't support the idea of a catastrophic, long-term collapse. With solid global GDP growth, cooling inflation, and a resilient economy, the fundamentals are sound. A correction might happen, but history has shown time and time again that every market downturn has been followed by a recovery and a new all-time high. A downturn isn't a disaster, it's a sale. It's an opportunity to buy great companies at a discount. Second, the fear of investing at an all-time high. It feels counterintuitive, but history shows that investing at market peaks is often a winning strategy. Why? Because all-time highs are a sign of a strong trending market. The market hits all-time highs far more often than it hits all-time lows. If you had waited for a pullback every time the market hit a new record, you would have missed on the majority of the gains over the last century. The momentum that drives the market to new highs often continues, powered by strong earnings and positive investor sentiment. Finally, there's the fear that it's all too complicated. The AI revolution, global trade policies, interest rate decisions, it can feel overwhelming. But you don't need to be an expert on every single detail to be a successful investor. The beauty of modern investing is its simplicity. You can participate in the entire growth story of the American and global economy with one or two simple investments. A broad market index fund, like one that tracks the S&P 500, gives you a piece of hundreds of the world's most innovative companies, including the leaders of the AI boom. By using a strategy called dollar-cost averaging, investing a fixed amount of money on a regular schedule, you remove emotion and guesswork. You automatically buy more shares when prices are low and fewer when they are high. It's a simple, proven, and powerful way to build wealth over time. In 2026, you stand at a crossroads. Down one path lies fear. It's a path paved with anxious headlines and the paralyzing belief that the safest move is no move at all. But as we've seen, that path leads to a guaranteed destination: the slow erosion of your money through inflation. Down the other path lies opportunity. This path is not without its bumps. There will be volatility, there will be days the market is down, but this path is built on a solid foundation of sturdy global growth and a technological revolution in AI that is fundamentally reshaping our world for the better. It's a path that history has shown leads to wealth creation and financial freedom. Fear is a natural emotion, but it should be a signal, not a stop sign. It signals that you need to be smart, that you need a plan. It does not signal that you should hide your money under a mattress. The evidence is clear. The economic environment is resilient, and the technological drivers of growth are more powerful than they've been in a generation. The choice is yours. You can let fear hold you captive on the sidelines, or you can take the first simple step towards building your financial future. If you're ready to choose opportunity over fear, subscribe to this channel. We're here to give you the clear, data-driven insights you need to invest with confidence. Don't let another year of opportunity pass you by. The real risk is letting fear dictate your financial future.
In summary, we've confronted the biggest financial fears holding you back. We've exposed the hidden danger of staying on the sidelines, the guaranteed erosion from inflation. We've shown you the powerful drivers of growth, strong global economy, and the transformative AI revolution. And we've given you the simple solution: broad market index funds with dollar cost averaging. 2026 can be the year you choose opportunity over fear, action over paralysis, growth over stagnation. The information is in your hands. The data supports action. The path forward is clear. The only question remaining is, will you take the first step? Subscribe now and let's build your financial future together. Hit that bell icon so you never miss insights that could change your financial life. Don't let fear cost you another day, another dollar, another opportunity. Your financial future starts now. Take action.